at Ecobank Capital. Thank you so much for joining us. Do tell us, first of all, what does this mean for Chase Bank customers?
Thank you, Terian. I think first of all I need to say that this is a very historic event. It's the first time that a seized bank is being reopened in Kenya. We've never had an instance like this. And I need to also add that the central bank was really under pressure, either from internal sources or external sources, to reopen this bank. Now, to answer your question, it's a good thing for the retail side of the market, for the bank, because there are two types of depositors that were present in Chase Bank. Yes. There were institutional depositors and there were retail depositors. And the retail deposit market was about 167,200 as per the central bank. Yes. These are the guys who are going to be allowed to withdraw. It's going to be a very managed withdrawal process. Of course, the institutional guys, which accounted for over 95% of the deposits, and there are very few of them, they will not be allowed to access the fund just for now. I think eventually the plan is to allow for a gradual withdrawal over time, at a period of time. Okay,
from what we understand, so KCB is now the manager, for Chase Bank. So what does this mean for the shareholders of Chase Bank?
For the shareholders for Chase Bank, effectively it means that the process to end the ownership of Chase Bank has begun, and I think it's a matter of it's just a question of the price, agreeing on the price, the exit strategy for them. But effectively, I don't think that they'll own this bank again.
Okay. Yeah. I'm sure you read that press conference, the press release by Central Bank. Yeah. And the question is, does this now mean that KCB is actually going to be the majority shareholder?
It doesn't mean that. In fact, I need to clarify that the KCB has not acquired Chase Bank.
Yes.
They're going to manage the withdrawal process.
Yes. But there was a line somewhere in between that press release that actually said or intimated that it's basically KCB is a shareholder in waiting.
Yes, effectively. And what I think they're going to happen is that KCB is going to conduct a concurrent due diligence process. As they manage the other process, they're also going to do a due diligence. The target, the objective is to eventually they'll have to have a majority control of the bank. But however, KCB still has the right to refuse to buy Chase Bank's assets if they find that it's not a comfortable deal for them. Yeah.
As we wind up, sentiments, different sentiments around the banking scene. Some saying KCB is in for a good deal, it's quite a cheap bank, but you seem to think otherwise.
I think otherwise, for three reasons actually. One is KCB is buying a zero deposit franchise. Basically, the trust that Chase Bank brand had in the market is not there. They have to build a franchise from scratch. I think that takes a lot of time and it's very expensive. Number two is that KCB is buying SME assets. In my own view, I think that KCB has never built a compelling value proposition for the SME segment. And I can tell you that in 2012, the SME book for KCB as a percentage of its total book was about 13%. That now shrunk to about 10% as of last year. And the final reason is that they will have to strengthen the balance sheet. And that means more money to the bank. Because once they're on board all those risk assets at Chase Bank, they will have a capital gap and the shareholders will have to fund this. And I think for me, if the shareholders will have to ask themselves, if we want to build an SME business, strong business, do we want to do the brownfield model? Do we have to acquire Chase Bank, or we can build our own model? I think that's the analysis that shareholders need to do. Because eventually we'll have to do both to them for approval at some point.
All right. George, thank you so much for your insights into that. George Bodo, Head of Banking Research at Ecobank Capital. Thank you.